The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me today. And good morning to our friends down under. And I think very soon it's going to be good afternoon for the southern states. But we've got another hour to go yet, or hour and a half. So New South Wales apparently has come off daylight saving now, which is interesting. Okay. How's the volume, guys? Can you hear me all right? Oh, thank you, Monty. Boy, you're fast, right on the ball. Thank you very much. Monty can hear me all right. The rest of you, I guess you can. Okay, so we've got a good turn up today. Hope you're going to find it very interesting. Albert's with us. He's a tutorial guy. Benjamin, he's a new client. Benjamin, great to have you with us. Carol, of course, always have to welcome ladies in particular because we don't have many, and of course we love ladies. Deborah as well. Deborah looks like she's a new client. Good to have you with us. Deborah, very good. George is with us. Wow, here we go. Greg, of course, the wealth manager from Colorado Springs. Joel from Vero Beach has arrived. Vero Beach is Florida. Harold, of course. Harold up in Redding, California. He's a gold bug. I actually did a tutorial in Redding quite a number of years ago now, and Harold was so hospitable to me, and we had a wonderful time. Thank you for being with us, Harold. He's probably one of our longest serving members. He's been with us forever, which is marvelous. Jayath is with us. Jeff's with us. Joel, I think we've already welcomed Joel. Let's see. Oh, Justin from, no longer from the Hunter Valley, but his father is down there. Good to have you with us. Father of the Year, Justin is. Mark, he's a DC tutorial guy who's done wonderfully well with his tutorial and can't get to his trading because he's such an efficient manager that he keeps getting offered new jobs, which keep him away from his trading. Murph as well, he's been with us forever. He's a tutorial guy. Murph, I hope we've solved your problems with seeing the website, but if we haven't, do let Terry know, please. Great to have you with us. Neil up in Chinchilla, he's a cotton grower. He's a great bloke, great friend of mine. And he's a tutorial guy as well, as is Peter Mack. He's the short-term trading guru. Very good at it too. Stephen, of course, is with us. Thank you. My goodness me. Sue up in Cairns. One of my star traders, Sue. She's a lovely lady. Came to me some years ago and said, I've been trading for quite a while and I've never made any money. But she's done extremely well trading the Danielcode. It's great to have you with us, Sue. Wonderful. Okay, Trevor's with us. And Wanda's with us. Greetings. Nice to have you with us. Lots of people. Okay, so let's move on. We've got a whole lot of stuff today, folks, and some of this I think is going to maybe test your grey matter or at least give you some more insights into markets. So let's get started here. And here we go. So markets, as you know, are rational, orderly, sometimes predictable. And of course they have to be, otherwise we couldn't have these Danielcode trading signals going so well. And this year, in fact, on Monday, when I named this webinar, it's called it Currency Lies, I hope you got the idea that currencies looked like they were going to be pretty phenomenal. They have been now for a couple of weeks. We've had some terrific trading with Forex, and sometimes it's a bit overshadowed because I tend to talk mainly about futures, and I apologize for that. I actually started off life as a Forex trader, and the Danielcode has always covered Forex, but you'll see today what great trading it is. If you haven't been interested in trading Forex, it's certainly another string to your bow. And trading on the Danielcode, trading futures or Forex is exactly the same. The only difference is that Forex, spot Forex, doesn't have a central exchange. The prices are created by the supporting banks, supposedly the banks that are creating liquidity for the various platforms. There's a bit of a misnomer there. I'm not sure whether they create liquidity or starve liquidity, but nonetheless, the prices set by different exchanges can be slightly different. So whereas with the Danielcode, if you've been with us for a while, you know that we have a 2-tick buffer when we're trading futures. Wherever the buy signal is, say at a true high, our entry is true high plus 2 ticks, and same for the sell, true low minus 2 ticks. Very important to know the difference between true high, true low, and chart high, chart low. So I think we've covered that before, but if you haven't, shoot me an email and I'll be happy to explain it all to you. But the difference with Forex is that because there's no central exchange and the prices can be slightly different, we use a 5-tick buffer above the true high to buy a market and 5-tick buffer below the true low to sell a market. And that's the only difference. All the rest of it is exactly the same, as you'll see. So I would put a note in here about commentators. I know I read an awful lot of financial news. I read a lot of newspapers. It's my real vice. I read everything. I read about 7 papers a day. You know, if you're interested in trading and finance, almost inevitably you're going to read some commentary. And like a lot of our news sites, real news and commentary have got intertwined. So you could be reading a very acceptable website with what you're looking for is news, and you get commentary. And you must remember, of course, that there's a commercial reason for bias, and all commentary is biased. People talk their trade or have some other reason to do it. The big example is gold bugs and physical gold. You'll often see comments on gold saying, oh, you must buy the physical, you must buy the physical, don't buy futures, they're dreadful. Well, what's the bias in that? Almost inevitably they're written by someone who's selling physical gold, who's selling coins or gold or whatever. So bear that in mind. It's all interesting, it's all entertaining, but don't take it too seriously. Sean's joined us from down in Adelaide, mate. Good to have you with us. Hope you're well. Hope your family's well. So has Redad. Yes, lovely to have you with us. Stephen, of course. Who we got here? Let's see. Milton's with us. Good to have you with us, Milton. We've got a good lot of you in already. Jeff, we haven't welcomed. Jeff, welcome to you. If you've come in a bit late and I haven't welcomed you, do forgive me. Akshay, of course, glad to have you with us, and Dave as well. Okay, so remember that commentary is biased. There's always a reason for it, and sometimes that's just a commercial reason. So this is a bit of commentary that amused me this week. The Aussie US dollar had a big jump on Wednesday, and the lady who covers finance for the Australian newspaper, which is probably our leading newspaper down under, she came up and said it jumped without a clear catalyst. That was the Commonwealth Bank's Global Markets Research Team. We speculate some stops were hit, which forced short covering buying. I mean, God, how lame. Aussie USD has been trendless in the past 3 weeks. Well, these are wealth managers. I don't know how good they are, but obviously they're not terribly switched on for short-term moves. Maybe that's not their brief. Maybe they don't care about it. But, the whole point of Danielcode trading is that all of the news is already known to the market and already distributed in the market. And that's part of what's called the efficient market hypothesis, which is a couple of big words to explain the fact that the market knows everything. All news is distributed and distributed very, very quickly into the market. Sometimes even a day or two before. You can see the final paragraph here. They said, we expect tomorrow's Australian labour force data for March will likely surprise on the upside, which it did, and give us AUD a boost. But the reality is that the signal was created at the close of Tuesday, not on when the employment figures came out on the Thursday. So, commentators have their own brief. That was theirs, and they knew nothing about this move because the market had been consolidating for 6 days or more, and we had a correlated buy signal in Aussie US dollars on the Wednesday, and maybe even the Tuesday. Let me get a chart that I can look at the right date for you. And yeah, here it is. The signal on Monday created the correlated TO3 plus buy. Now, what do I mean by that? You're well aware of what our signals are, the TO3 signals, the TO3 plus signals, but there are also correlated trades that perhaps you don't see, and I don't always put them in, and this is one of them. And I'll show you in a moment why that was a correlated trade. But it's very important to understand both direct and indirect correlations. This is a direct correlation, as you'll see, and it was a nice trade, $1,000 odd, straight up, very nice. So let's move on here. So this is what direct correlations are. In Forex and currency futures, any common currency provides such high correlation that a Danielcode signal in one can be executed in any other. For example, if you've got the US dollar on one side of the trade, all of the markets that have got the US dollar on one side of the trade are likely to move in the same direction. Now, remember, Danielcode is very specific on direction, but it's mute on momentum. You can get, in those correlated trades, you can get really big moves in some currencies and not so big in other currencies, but directionally, it's highly probable that they'll be correlated directionally. Gold and silver and the HUI. The HUI is actually an index. It's the Unhedged Gold Miners Index, and last time I looked at it, which was some years ago, there were 25 major gold miners in the HUI index. I think it changes; they come in and out, but basically, it's the major gold miners who don't hedge their forward production. So you can't trade that with futures. You can trade it with options if you're wild enough or ignorant enough to do that. But gold and silver and the HUI are so directionally correlated that a signal in one can be executed in any other. US dollar index, the DX, which itself is a amalgam of a number, I think about 26, 27 other currencies, and they're trade weighted in that index, but there is a very good futures contract on that which we trade actively. So the US dollar index and gold are often inversely correlated, and that correlation comes and goes, but it's been fairly strong for quite a while now, and I actually wrote an article about it some years ago about what happens when that correlation breaks down. Historically, when it breaks down, it's always in favor of gold. Gold becomes the dominant market, and US dollar index attaches to it with an inverse correlation and then loses it. So remember, all Danielcode signals create their own failure point. I've talked to you about this in the last 2 webinars we've done over the last month, which is 2 fortnights, Greg, for you. I know your son's very interested in fortnights. It's probably an English expression. We use it all the time in Australia. And a fortnight is 2 weeks or 14 nights. That's where it comes from. All Danielcode signals create their own failure point. And often the failure point at which we do a stop and reverse is the only way into the next trade. And you'll see that later on as we go on. But don't be afraid of outside bars. I know people get absolutely flummoxed with outside bars. I'm trying to think. We have a couple of gentlemen who really, really hate outside bars. But if you know how to trade outside bars, which I teach you, don't be afraid of them, because they create new entries almost always with the trend. And what actually happens with outside bars is that the market gets to a time and price where it creates a new Danielcode signal, a reversal signal. And that reversal signal is elected, but then a new force comes into the market. We're assuming the market was balanced at the time it created the reversal signal, as they are. But then a new force comes into the market, always in the direction of the established trend, the previous trend. And they create new entries, because if the day we get an outside bar on a new entry, we always stop and reverse at the point that that outside bar is created. Okay, so sometimes it does seem brokers and exchanges have purposely made trading confusing. Some markets have 1 decimal point, some have 2 or more, some Forex markets have 4 decimal points, and some are priced in carets. This signal, it's the shift 6, I think. Let me look at my keyboard here. Is a caret. And grains and treasuries are quoted in carets. And that's usually a function of the rule of 8. Very interesting, but you'll see grains and T-bonds, and as long as you know the number of ticks that make a point, it's really quite simple. Grains, for example, will have caret 2, 4, 6. In fact, that's a quarter, a half, and 3/4 of a point. T-bonds have a 32, 4/8, a 32, all based on the rule of 8. And at 31.25 per tick in T-bonds, I think. As well as that, there are many different charts for the same market. I had a gentleman from West Australia write to me last week who couldn't understand how the Danielcode charts were different to what was showing on his platform. He had a different platform, but I suspect what had happened is he was looking at a back-adjusted chart. 076 in the Trade Navigator lexicon is the back-adjusted chart, and those prices in the back-adjusted charts are not real. They're based on the real price when it's the front month, but at rollover, the appreciation or depreciation in the premium is either added or subtracted to the market. So if the market gaps up on rollover, the height of that gap will be deducted from all previous contracts. So it's accurate for the current market. It's not accurate for previous for previous contracts because they have been back adjusted. As well as that, some markets have insufficient volume to be a good trading medium. Live cattle and feeder cattle in particular are very, very good trading markets, and sometimes they have really good volume, but they don't always have good volume. They have patches where they have very small volume, and they're not attractive as they are. They're not terribly good trading instruments. So the Danielcode solves all of these problems for you. Excuse me. And if you are interested in trading, I suggest you take a Danielcode tutorial and learn everything. If you can count to 3 forward and back, and you can tell red from blue, I can teach you everything about trading futures. If you can count to 5 forward and back and tell red from blue, I can teach you everything, not everything, everything. There's a typo there, excuse me, about trading Forex. You have to understand that I do these webinars, I do these PowerPoint slides for you around about 3 or 4 o'clock in the morning, because that's the only time that Australian time will fit in, allow me to do it. So occasionally you will see a typo in here, for which I ask that you forgive me. So the Danielcode is based on a set of proprietary time cycles, which you won't see anywhere else. They're not old highs, old lows, they're not fibs, they're nothing you've ever seen before. And this is the hardest thing for most people to get their head around. In Danielcode trading, time and price are the same thing on different axes. And if you go through any of our previous webinars or articles, you'll see that when we're talking about time, we're using exactly the same ratios that we're using when we're talking about price. So I know that's hard to accept, but I can assure you it's true. And the Danielcode is unlike anything you've ever seen or heard of. So its signals are different to all traditional trading methods. And here's the really cute thing about it all. Markets are constantly trying to talk to us. But before I had the Danielcode, I didn't understand. Once you have the Danielcode, you will understand. And I've got an example, a nice one here, to show you in a few minutes. That what the market is doing, this is the mini S&P, and this is the current run-up in the mini S&P. And we had a lovely TO3 buy signal right at the bottom. Off it went. We had one counter trend 2 days ago, which we lost a few dollars on, but not much. And then we got long again as it created the outside bar to be long again at the close of that bar. And that's because the failure point of the sell, the Danielcode sell, is the high of the setup bar, or the bar that creates the entry. So look what this thing's been doing on the way up. I'll just get some numbers here so I can show you, or some dates. And interesting, if you don't like numbers, if you're a bit scared of numbers, don't worry. We do it all for you. Once the signals are created, which we post every day, and if you do a tutorial, you'll be able to create your own signals for any market all the time. We then put it into our trade program that tells you exactly where to enter, where to put your initial stop, and you can see how it all develops from there. But this, if you look at the close, the little red bar on March the 30th, that's target recognition. Very, very close to the swing low, only 3 bars later. And what that's doing is that's the market saying to you, I know these numbers and I'm tracking them. Now, it doesn't track them every day. Sometimes it'll track them day after day after day. But this is a more normal pattern, that it will track the market periodically. But what that's the market saying to you, I know these Danielcode numbers and I'm tracking them. So we have target recognition back there at the close of March the 30th. We have target recognition at the close of May the 5th, the close of that number, 4070.25. Have a look at the blue line, 4071, just 3 ticks away, and there's 16,000 ticks in that number. Here's the next day you got to. Little key reversal bar, then an inside bar. This is the second inside bar. It's this one right here. See how it's searching for that number all the time? That's the market's way of saying to you, I know these numbers and I'm tracking them. Up it goes. We get to 3 days ago, which was a Tuesday. Look at the high of that bar, 4139.75. There's the Danielcode, blue line, 4139.25, the same 3 tick variance. And we want target recognition. We say that it has to be valid, it has to be within 0.1, not 1, just 0.1% of price. In reality, when I started off trading, the S&Ps was in the 1,000, and gold was a fair bit lower at the time. But look what's happened. In a market number like this, for say 4139, for example, in the mini S&P, there are 4 ticks in every point. So there's 16,000 ticks in that number. So what's 0.1% of that? A lot. But look what actually happens. Look where that high is. 4139.75 against Danielcode number 4139.25. And often as these markets, as a trend matures and has been running longer, it creates more and more of these blue lines. And you look at them and say, gee, that's a lot of blue lines. But it's the way the market finds those numbers. It's very, very specific. It has to, have a look what's happened today. You've had a nice, really powerful momentum bar up. Where did it close? 4162.50. Where's the Danielcode number? 4161. That's 6 ticks difference, that's all, out of 16,000. That's how incredibly accurate this target recognition is. And you can train your eye when you've been doing this for a while. You will just see this target recognition. It's screaming at you. And now and again, the market will give you a little coaching lesson like it's done here of showing all the Danielcode target recognition as this market has run up. It really is quite fabulous. So one of the issues I talked about when we set up this webinar today was not only the furphy that US dollar strength, according to some commentators, is sucking investment out of China. It's rubbish. I mean, it's just simply not true. On the T-bonds, more so the comments basically on the 2s, 5s and 10s, but the concept that yield is crashing to eventually negative rates is simply not true. What has happened, though, you've seen this chart. This chart's been running, I've been running this chart since back in the 90s, and I've shown it to you on many, many occasions. But look what's happened. We stopped moving this thing back in the day. I'll tell you exactly back in the day. Isn't a very technical decision, is it? So here it is. I can tell you that the middle part of that red line that's defining the Danielcode trading channel, we stopped that in October 2016. You can see there's a big arrow up to the high. But we stopped moving that Danielcode trading channel up in 2016. Look what the market's done. It's continued to track this channel perfectly. Just a few ticks difference. The last high that came in, right at the 2 standard deviations from the mean, which is the thicker of the red lines in there. What's happened now? Have a look. It's dropped down and it's fighting to hold 1 standard deviation below the mean. Is that a big deal? Go back in the chart. Go right back. Go back to 2005, 2006, 2007, 2008, 2010, 2011. That line, the bottom support line or the minor support line of the major Danielcode trading channel, has supported this market since way back, as I say. It tested it for the first time back close enough 2006. And it still is, and that's where it is now, and it's fighting to regain that level of support. So is that a big drama? No. If you look at the chart this way, if you look at it on the angle, which is a very big thing in everything we do in the Danielcode, if you look at it on the angle, it's a bit weaker, but it's at a point that traditionally has been support. And you can see the market's been fighting. It's broken through that support. And has then been fighting to get back onto it. So that's the more the truth than what the commentary is. Same with the dollar index. This furphy that, the dollar index strength is pulling investment out of China. What a lot of rubbish. What strength? I mean, this market's been range trading since 2014. And it still is. What's it doing when you look at it on the angle? It's broken some really important support, and it's struggling to get back to that support in the same way as T-bonds, which try to find its major support. But to look at the US dollar and say it's incredibly strong, it's just not true. It's not strong. It's weak, and I suspect it's getting weaker. The amounts of money that the Biden administration has already thrown at debt money that's thrown for all sorts of purposes, and the announcement of their plans going forward. I mean, the national debt is going to be, God, Lord. Carol, welcome. I see that Carol's arrived. The national debt is going to be absolutely staggering. Well, don't curse Biden too quickly. If you look at it historically, um, uh, almost all presidents have provided over an increase in the government debt. The real blowout started with Obama. He pretty well doubled US government debt in that 8 years. Trump, of course, total spendthrift. It's not his money, so couldn't spend it quick enough on tax deductions and tax reduction as well, the rates. And now you've got Biden with a whole lot of issues that most of them are pretty real. I mean, I'm an outsider. I'm not an American, so I don't vote. I have no stake in it. I don't have a horse in it, in that game. But a lot of the stuff that he's talking about is very necessary. And, of course, I think it's reached the stage that most legislators will understand that America's going to have tax increases. And American tax law, frankly, is a bit of a joke. The loopholes in it are just, you can drive a horse and carriage through most of them. And the reality is there are some very, very privileged, very, very wealthy sectors of the community that don't pay what you would expect them to pay in a democratic society where the underlying morality is that those who can afford to pay tax pay more, so the government can spend on those who don't. What's going to show you? Can I show you the long-term trend channel for the S&P, Sean? Yes, most certainly I can. I'll get to that when I work my way through this, if I may. So anyway, that's the situation with the dollar. I think we're going to see much, much more debt. It's pretty staggering what's either been legislated or announced already. And no doubt you're going to have to see some substantial tax increases to pay for all of that. So let's have a look what started off this fabulous, truly fabulous week of trading here. Now, don't forget, this is, I think, let me check my book of words. This big movement in the Forex actually started last week, but then we had some consolidation. And boy, have a look what's happened this week. This is our TO3 buy signal in New Zealand Japanese yen. Okay, so nice trade, $890 into today's close. You can see this has been a really good market so far already. 1800 in the drop down. TO3 sell signal came right at the high. The TO3 buy signal came right at the low. We've got 1, 2, 3, 4, we've got about 5 days out of that. The next sell signal came right at the high. The low came on Tuesday. So just think about that. There's your TO3 plus buy signal. TO3 buy signal. Look what happens now. At the same time, what did we see? Weakness in the US dollar. How do we know that? We had a TO3 buy coming up very shortly on, here it is. At the close of Monday, April the 12th, we had a TO3 buy signal. That trade was elected. We've moved off here for some reason. Here we are. That trade was elected, 2 ticks above it, then it reversed and took out the low. In other words, we got an outside bar on the day of a new entry. When that happens, it is mandatory to stop and reverse at the failure point. Now, every Danielcode signal creates its own failure point. If that trade is elected, then and the market then goes to the other side of the setup bar, that's the failure point. And it hasn't just got to be one day. It can be any time within 3 days. But that told us that there was considerable weakness in the US dollar. Now, we talked about the commentary a bit earlier that, the Aussie dollar was going to do well because there were going to be good payroll figures. That's not the point. The Aussie dollar is about as important as futures markets, forex markets, as a pimple on a pumpkin. It was an Aussie dollar because it's not. It's US dollar weakness. The US dollar drives everything. And there was a clear signal to us that it was significantly weaker still. So because of that, we had a New Zealand JPY buy in the TO3, the TO3 plus. That also set up a correlated TO3 plus buy for New Zealand US dollar. In other words, we thought New Zealand was going to strengthen against the Japanese yen, which was the TO3 signal, and the US dollar was weak. Then we also expect the New Zealand dollar to strengthen against the US dollar, which is exactly what it's done. And that's a correlated TO3 plus buy. Now, I don't always put these correlations in the signals for you, but here was a beauty, wasn't it? 1250 straight up. Lovely stuff. Let's have a look at the dollar yen. Same thing. If we expected strength in the yen, what's happening here? This is Aussie. The heading here is wrong. This is the AUD-JPY. Same thing with the wrong heading. Do forgive me, folks. This is the Aussie-JPY pair. Same thing. If we expected weakness in the US dollar and strength in the Aussie dollar and weakness in the JPY, then it would create a signal in this market, which it did. It gave us a straight out TO3 plus buy. Very important, 700 odd bucks in a couple of days. Lovely. This is the Aussie JPY. Same thing, same logic. We expect the Aussie to be stronger. We expect the yen to be weaker, and it creates a TO3 plus buy signal. You don't have to think about it. You don't have to worry about the payroll report. You don't have to worry about inflation. You don't have to worry about the price of soybeans in Tibet this week. It's all in the charts, and it's the charts themselves, as simply as you can see. I'm showing you the charts that set up the signals, and there was a TO3 plus buy signal for Aussie JPY, and whoosho, up it went, another 700 odd bucks in 2 days. This is the Aussie USD. You've already seen this, and this was the correlated TO3 buy for 1,040 bucks. Here's the EUR-AUD. We got a TO3 sell signal right at the high here. Can you see that market has hit the blue line so accurately? I mean, the target recognition is so accurate, you can't miss it, and your eye can just find it straight away and say, wow, that's target recognition. That sets up a TO3 sell trade, because the other things that it's not just price that sets up a sell trade for it or a buy trade. But target recognition is the prime consideration when we're talking about trading price. Now, don't forget, we also trade time, and that's a separate discussion altogether. Stephen, what do you want to repeat? Review call? Yeah, I can. I'll do that when I get to the end of this, mate. This is EUR-AUD. The first part of signal creation is target recognition. And that's the big difference between the Danielcode and everything else you're ever going to see. Because to set up any signal in the Danielcode, the first thing we need is target recognition, either on the bar high-low or on the close. And you don't see that anywhere else in the world with any other system. These are not old highs or old lows. These are Danielcode ratios from previous moves in the chart. Previous matrix in the chart creates its own Danielcode numbers. Red and black for retracements and consolidations, blue for extensions of the range. This is one of them. This is an extension of the range. Hit that 5675 number almost exactly. I can't see the other chart at the moment. That's on yet another computer. But I can tell you, you can look at it yourself and just say, wow. And that's what sets up the trade. Very easy, $1,300 straight down. This is Euro-GBP. This is the same thing. TO3 buy signal. Up it went, 1, 2, 3, 4 days up. Look where you got target recognition. At the blue line, 8695. What was that high? A few ticks away, that was all. And that was what set up the time to get out job, which happened at the next day. We got a 1 bar low, but $1,800 in Forex. Wonderful. Just keep adding up these numbers, folks. Here's the EUR-USD, same thing. If we thought that the USD was weak, which we did because we had a failed buy signal in the US dollar index, even stronger than a failed sell signal. The failed buy signal has extra strength, the failure point. So if we thought, when we didn't think the charts were telling us that the US dollar was very weak, that meant that you could expect the euro to rally, which it did. Now that's simply a correlated TO3 plus buy that comes from the other charts that you've seen. And that's how it works, and that's how it sets up. And of course, as I said to you, Danielcode is mute on quantum. It's very specific on correlations, both direct correlations and indirect correlations. Indeed, also inverse correlations for you gold fellas. But it's mute about quantum. So this is actually a chart doing the same thing. If we expect the US dollar to be weak, which we did, then we expect the British pound to rally, which it did. But have a look at it. Not much, nothing too exciting. Why is that? Because the relative strength of the various currencies is what dictates quantum, not the signal. The signal tells you there's a trade there. It tells you whether it's a buy or a sell. It tells you, if you're just new to the website, the simplest exit is first profitable close or first profitable open, if you like, because by the time you see the close, the market's finished its session for the day. That's the simplest exit you can find. Once you know how to trade, I'll teach you how to hold these trades so that you get 85% of everything that's in them. So anyway, look at this. This is the dollar-yen trade. We had a TO3 sell signal right at the high. What triggered that? The Danielcode blue line, 110.739. Here it is. Let me find another chart here. Here was the close, 110.735 against 110.739. I mean, after this magnificent, huge run up here, 1, 2, 3, 4, 5, 6 days up. A lot of money in that trade both ways. Yes, we had a buy signal right at the low. What happened here? This is target recognition of the red line. That's what set up the buy signal. Looked pretty anemic the first day. Whoosh, it was gone. It was on its way. But look at that close up here that set up the TO3 sell signal. There's the close. 110.735. What's the Danielcode blue line? 110.739. 4 ticks variance. And that, my friends, is target recognition, and very specific target recognition of that. And that's what we're looking for. We must always, target recognition, precise target recognition, is the precursor to creating all signals in the Danielcode. And that's the big difference with it. These are not, as I say, old highs, old lows. They're not some fib ratio. They're completely unique and different to anything you've ever seen before. Okay, let's see if we can move on here. I think I jumped one. Here we are. That's where we were. Dollar yen. And look what happened here. This was oil today. Now, I have a mea culpa, which happens rarely, but it does happen. Oil had been consolidating for the last 1, 2, 3, 4, 5, 6 days. In fact, on another argument, you had one big down bar. Apart from that, 7, 8, 9, 10, 11, 12, 13, 14, 15 days. So at some stage in here, in our 6S trading, which is not the same as our TO3 or TO3 plus trading, but in our 6S trading, I said stand aside. And we didn't take the buy because we weren't taking any signals. and that saved us 1, 2, 3 or 4 losing trades. But we had to then wait for the breakout, which we got yesterday. Fabulous. It was, though, a TO3 plus buy. Those of you who took the trade, almost $2,700 per one contract. Pretty nice stuff. Here's the S&P. You've already seen this chart. I showed it to you to show you all of the target recognition. But also I want to show you how simple this stuff is. You've got a TO3 buy on the key reversal bar at the bottom. The buy actually came from the day before you got target recognition. And then off it went, woo. And 2 days ago, 3 days ago, we had an outside bar. And yes, we had a sell signal there. The sell was elected, and the market then reversed and took out the high. At the point it did that, we have to do a stop and reverse and be long, which we were. So we're still long this market. And the failures, where I put these on for you, they're never more than 50% of the average daily range. Sometimes there can be considerably less. Sometimes failures can be profitable even until the market then reverses. Due to the techniques we use, if you are doing a tutorial or trading success, you'll understand what I'm talking about. Well, there's some part at $12,200, less the failure into the stop and reverse. Wonderful. But look at the target recognition. Where's the high in that market today? We've already done this. We had a look at this market earlier. There's the high. It just stuck its head through a little bit, and the high is at 416,650. The close, remember, target recognition is valid on the bar, high, low, or the close. The close is actually 416,250 against the Danielcode number at 4161. It doesn't appear to be on this chart, and that's because the daily bar on this chart was only up to about 3:30 this morning, my time, which would be just after lunch, US time. So I created this chart for you much earlier, but you can look at the close on your own charts today. 416,250, there's the Danielcode number, 4161, 1.5 points, 6 ticks variance. Extraordinary, isn't it? And it happens all the time, all the time, all the time. Okay, let's move on. Gold. I couldn't have had a day without a gold chart here, because Howard's with us. Let me see here. Where are we here? Okay. Harold, this is for you, mate. Okay. We had a correlated TO3 plus buy. Okay. What happens sometimes, these markets won't give you a signal directly themselves, but silver did. Silver gave us a buy right in there, and the correlated, because gold and silver are so highly correlated, a trade in any one, a signal in any one can be taken in any other correlated market, provided the trade is elected, by which I mean the market has to go to that number that would trigger the trade. In this case, 2 ticks above the high of the setup bar, which is where the arrow goes to. So gold got that. Didn't look terribly impressive. Next day looked pretty sad, really, Wednesday. But look what happened today. Whoosh. Off it went. Dollar weakness, gold strength. Now, we've had weakness for a long, long time in the dollar, which hasn't been reflected every day in gold. And sometimes it loses that inverse correlation, and then it comes back. Is that what happened today? Possibly. But if you have a look at the outside bar 2 days ago, you've got a very, very strong key reversal bar that stopped exactly at support, the Danielcode red line that you can see there underneath Tuesday's bar, I should say. The low of that bar was 1723.2. What was the red line? 1722.9. 3 ticks, folks. 3 ticks variance. Key reversal bar, pretty good buy signal, isn't it? And it was also correlated TO3 plus buy. Okay, see if we can go on to the next chart here. Harold, I hope you enjoyed that. This is silver, which actually gave us a buy signal in there. I'm not sure that what I put on this chart is totally correct, but certainly the big buy at the bottom, target recognition from the blue line, that's valid. We had a TO3 sell right at the high. Here we are, we do silver. Here was the TO3 sell. How did that set up? The high of that bar is 2567.5. Where's the Danielcode blue line? 2566. 1.5 points, three ticks. Amazing. That's what it does, folks, all the time. Have a look what happened on the pullback bar, the Monday's bar. That's the bar just to the left of the grey bar that's got the arrow on it. The low of that bar, 2472.5, against the red line, 2471. Same thing, 1.5 variance, exactly the same variance, top and bottom, and in both cases totally immaterial. That's what created the TO3 plus buy signal for the next day. Okay, here's T-bonds. Pretty interesting piece of trading, isn't it? We had a TO3 sell. Okay, we had a TO3 sell, then we had an inside bar. So let me talk you through how this works because it can appear complex. We had a TO3 sell at the close of Friday, April the 9th. Next day was an inside bar. An inside bar for trading purposes is a null or a void. Simply carry forward the last valid signal you had. Now, when you get to forecasting, inside bars are vitally important. There's actually nothing random about them. They're tools pointing the further to future directions of highs and lows. When you get on to doing the fourth seal, those inside bars are place markers for the angle. The fourth seal is an angle, and it's largely controlled by inside bars. But for trading purposes, we treat an inside bar as a null or a void. Simply carry forward the last valid signal you had. So in this case, you had the sell from Friday's low at 156.01. That trade was elected, and then the market reversed and created an outside bar. The moment it creates the outside bar for us is a mandatory stop and reverse. Okay, depending on how you're trading, how advanced you are, if you're a fairly newcomer to trading, I tell you, don't trade the highs and lows of the inside bar. Trade the highs and lows of the last bar that it's not itself an inside bar. Once you get better at it and do tutorials or what have you, yeah, Harold liked today. Good stuff. Yeah. Dean, yeah, mate, had to hold our nose for a day or so, but he's long, both gold and silver. Well done. Dean's one of our real star traders, folks. And he's done 2 Danielcode tutorials. He did one in Colorado Springs, I think, years ago, maybe 2010, 2011. Didn't go that well with it. Tried, couldn't get it. Came back to me 18 months, maybe 2 years ago, said I want to do another tutorial. Now he's got it. He's an absolute star. This is the chap. He lives up in that really, really cold country in Canada, but he doubled his account in August, got about 80% in September, and since the beginning of the year, he says he won't tell me how he's going because it would be boastful. So that's what the Danielcode can do for your trading. So look at this. So then we've got the stop and reverse there on the mandatory stop and reverse. Didn't look too flash, did it? And the next bar, the next day, didn't look good at all. Look what's happened. Whoosh. $1,600 straight up. 3 days. Wonderful. Some part of it anyway. Okay, and I think we're getting along with the charts. This is copper. The TO3 plus buy off the inside bar. If you're trading the Danielcode, if you're a relative newcomer, you're buying the high of the last bar that was not itself an inside bar. If you had a tutorial, you were buying the high of the inside bar. In this case, doesn't matter much because they're both very much the same. But what a lovely, lovely trade. straight up $4,000. So look where it stopped. Straight up into the blue line, 423.95. Where is the high today? Just a few ticks away. Just a few ticks away. Here it is, 423.6. The Danielcode blue line is at 423.95, and there's a red line there with it. Wonderful stuff, isn't it? And there's like huge momentum in that bar. Why did it stop there? They do all the time. Have a look at the previous bar, which was also a high momentum bar on Wednesday. Where did it stop? 413.30, blue line 413.55. That's what markets do. They're ruled by the Danielcode. No? I know all that sounds extraordinary, but I can assure you that is the case. And not to forget, of course, our time trading. Those of you who've been interested in trading time or are going to go and have a look at trading time on the website, this is 6S, and this is sugar. Really small market. We cover small markets and big markets. We have traders with all sorts of bank balances for their trading. Sugar has a margin of about $1,000. It used to be $500 until I started covering it, and 18 months later it was $1,000 where it stayed. It's thereabouts, might be a few dollars more or less. But have a look. Today's trade up here, $1,500. The short trade which we were in last, we had 570. We had a buy there, which actually, I think we either broke even or made a few dollars on that little buy, and then down again, $380 into the inside bar, and $1,500 up to today's close. Just hold for 1 second, folks. Would you please be so kind? Okay, so we have success on a whole range of markets. Some of them have big margins, some of them have little margins, but do take a look at that, please. So if you want to be a super trader, folks, I'll teach you everything that you've seen me do today and in previous webinars, and just send me an email, jneedham@thedanielcode.com, and I'll be happy to send you some documents and see if you'd be interested in learning to trade the Danielcode. It is extraordinary. It's certainly worth the time for you to think about that option. So we run these tutorials to suit you. They're one-on-one by me, and they're done on GoToMeeting, which is the same people who provide this one. And we teach you everything about trading price and everything about trading time. So if you are interested, do let me know, please. If you are subscribed to the website Pro, or you're thinking of subscribing to the website Pro, that's the $249 a month package, you're entitled to 2 free 6S markets. So let Terry know that which ones you'd be interested in, and he'll be happy to switch you on. And you can change free of charge once a month or any other time you want to. Terry probably charges $20 or maybe $30. And remember, the business of trading futures and Forex is not to be right. The business of trading is making money. If you haven't already, please go and have a 14-day free trial. Just go to the website, www.thedanielcode.com. Hit the register button. Any issues, particularly if you've had a previous trial, the website will probably remember you and won't let you go any further. So contact Terry at support@thedanielcode.com, and he's our webmaster and an IT guy. He'll be happy to fix that up for you, get you switched on. So this is our disclaimer statement, folks. I do earnestly suggest that you read it and accept it. It's very, very easy to lose money trading. I know a lot of people who've lost money trading, and the quickest way to lose money is to start trading before you know how to trade properly. So do be very cautious. Don't trade with real money unless you're absolutely confident in your abilities as a trader. Okay, so that I think is the end of the formal session. Let me see what we can find for you. Let's have a look at the charts these other guys want to look at. First of all, Sean wants to see the long-term trend channel on the S&P. Here we are. Let me get that for you. Trend should be in here. This is US dollar index. Let's put the S&P on. It's not on that one. Let me see if I can find another one. It might be on the other computer. Just bear with me for a moment, folks, please. No, it's not on here. Sean, I'll send an email to me, Sean, and I'll send it to you. Would you do that for me? Be happy to do that. Stephen, you wanted to look at a corn chart. I think that's on the other. That's on the other computer as well, mate. If you shoot me an email, I'll send you a updated corn chart. Be happy to do that. Dean's doing so well. Love that. Harold's happy with today. That's even better. Dean's all over bonds. Benjamin, was the TO3 sell signal on the S&P futures elected? No, it wasn't. Let's get to that. Here we are. That's a 12-day chart. Let's go to something reasonably current. S&P. No, straight up for more money, Benjamin. Akshay, have a look at the long-term 24-day S&P chart. Same thing. I don't have it on this computer. Akshay, shoot me an email. Relation to Frank's article, yes, and I'll be talking to you about that at our next webinar. Quite seriously, some people are starting to react to that already. Very exciting stuff, but remember, trade the market, not the forecast. Okay, I'll talk to you at length about that next week, Akshay. If you're joining us, Sean, yeah, I'll send you that, mate. My pleasure. And that's us for today, folks. I hope you've had some really interesting insights. I hope you've seen that I used to have an expression saying there are more ways to skin a cat than choking it with cream. But my wife's a cat lover. In fact, we have a couple of cats. And she really seriously objects to me saying that. So forget that I said that. But you can see that the ability of these charts, all markets are linked. And these correlated and indirectly correlated markets are really, really interesting and give you terrific additional trading opportunities. But as you can see, this week has just been a monster. And if you're getting to the stage that you're tired of counting your money, be strong. There's more coming. And that's us for today. Thank you for being with me. Hope to see you next time. Bye-bye for now. Yeah, indeed. They're still with us. They're still with us. Talk soon, folks. Bye-bye for now. Anything you need to know, shoot me an email, please. jneedham@thedanielcode.com, and I'll be happy to deal with it. Gigs left, had a good time, enjoyed it. He ran out of time. He's probably gone to play golf. That's what he does a lot of the time. Good on you, Murph and Dino. Talk soon. Bye-bye for now. Thank you, Martin. Will do. Look forward to talking with you and Benjamin as well. Wonderful. Bye for now, guys. Bye.